I am an old man now, well past the years when most people stop paying attention, but I've lived through enough currency crises, oil shocks, and market collapses to know when something truly important has happened. And my friends, it just did. The strange thing is, almost no one noticed. The world is glued to political drama, arguing about inflation numbers, interest rates, and the latest headline scuffle in Washington. But while everyone was busy shouting, something far more consequential unfolded in near silence. China has quietly assembled a new multilateral framework, the kind they're calling a gold settlement alliance, and I can tell you from experience, moves like this don't happen by accident. They happen when trust begins to shift. Everyone is talking about inflation and interest rates, but they missed this, the real turning point. Because the market doesn't care about your opinions or your politics. It cares about fundamentals. It cares about trust. And for the first time in my lifetime, I felt the floor move just a little under the dollar, as if the world finally questioned what it had long taken for granted. For weeks, the headlines have been buried in the same noise: partisan hearings, budget fights, polls shifting 1 point this way or that. People imagine these stories shape the future, but they're watching the wrong stage. The real play is unfolding behind the curtains, and only a few have even glanced at the script. While America argues with itself, China has been stitching together a coalition of nations, BRICS partners, energy exporters in the Middle East, and several Asian economies, into something far more strategic than the world seems ready to admit. They have formalized a gold settlement bloc, not a return to the old gold standard, but a new mechanism that allows countries to settle trade, especially energy and commodities, without touching the dollar at all. That distinction matters. A gold standard ties your currency to metal. A gold settlement network bypasses your currency entirely. It builds a parallel highway where value moves without passing through Washington's toll booth, without SWIFT, without U.S. banks, without the oversight that has defined global finance for 8 decades. And this, quietly, is the first genuine structural challenge to the dollar I have seen in my lifetime. No announcement, no drama, no speeches, just a shift so subtle most people missed it. But this is how dominance erodes. Not loudly, gradually, invisibly, until one day the world is no longer using the system you assumed was permanent. Let me explain what makes this gold settlement system so powerful, because the mechanics matter. China doesn't need to destroy the dollar, and they don't even need to replace it. All they need is a credible alternative, something stable, something neutral, something no single government can freeze, sanction, or weaponize. Gold fits that role perfectly. It carries no flag, it belongs to no nation, and when trust in political currencies wavers, people instinctively return to what cannot lie. For countries under sanctions or under threat of sudden economic pressure, this alliance becomes more than a tool. It becomes a lifeline. If the dollar is seen as a weapon, gold becomes a shield, a way to continue trading without asking permission from Washington. And that is why this shift is so profound. It's not theoretical. More than a dozen nations have already signaled they will join, align with, or mirror the system. That means global trade, the plumbing beneath our entire economic order, is quietly being rewired in real time. We are watching the early stages of a parallel architecture forming under our feet, an emerging map of alliances rooted not in ideology but in trust and necessity. People think this is just about China. It isn't. It's about a world that has grown tired of depending on one currency, one system, and one arbiter, choosing instead to build a second path before the first one becomes too uncertain to rely on. If you really want to understand how serious this moment is, don't look at speeches or press briefings. Look at capital, because capital always moves before headlines do. Over the past several weeks, gold futures have surged in volume with an intensity I haven't seen in years, a sign that institutional money sensed a shift long before the public even knew where to look. Central banks, especially outside the West, have accelerated their gold purchases to record highs, quietly stacking reserves, as if preparing for a different financial world than the one Washington still imagines we're living in. And perhaps most telling, foreign holdings of U.S. Treasuries have dipped in a way that can't be explained by routine fluctuations. That's not a coincidence. That's caution. Markets react long before politicians acknowledge reality, and what we're witnessing now feels like the first tremors before an earthquake. Nothing dramatic on the surface, nothing that panics the average person, just subtle shifts in the ground, shifts that tell you pressure is building. Global funds aren't dumping the dollar, not yet. They're doing something far more revealing, quietly hedging, diversifying, repositioning themselves in case the old assumptions about American stability no longer hold. And when capital moves that silently, it means it already knows something the world is only beginning to suspect. These global moves may feel distant, but they always find their way into the kitchen table. When trust in the dollar weakens, even slightly, the first place it shows up is in the cost of the things American families buy every day. Most of what we consume, electronics, vehicles, clothing, even much of our food, depends on imports. And when the world grows unsure about the dollar, those imports become more expensive. It's the same effect tariffs have, only quieter, harder to point at, and far easier for policymakers to deny. Currency instability functions like an invisible tax, one that doesn't show up on your pay stub, but does show up at the checkout counter. And once that confidence begins to crack, interest rates rise to compensate for the added risk. That means higher mortgage payments, more expensive car loans, pricier credit card balances, and fewer families able to keep up. Purchasing power fades not because people earn less, but because their money simply stretches shorter than it used to. This is how global events reach ordinary lives, not through dramatic announcements or sudden collapses, but through the slow tightening of daily costs until the strain becomes impossible to ignore. And that strain, once it begins, rarely reverses quickly. When I step back and look at the larger pattern, I'm reminded of something history teaches again and again. Empires rarely fall through war. They fall through lost confidence. Reserve currencies don't collapse overnight. They erode slowly and then, all at once, the way the British pound ceded global dominance after World War II, or how Rome's silver debasement hollowed out its economy long before the empire realized what was happening. That same pattern, quiet decay beneath a loud surface, is what concerns me now. In Beijing, in Riyadh, in Moscow, in Brasilia, conversations are shifting from political theory to practical calculation. If trade can be settled in gold, why hold so many US dollars? If a parallel system exists, why remain dependent on treasury bonds, whose value relies entirely on faith in American discipline? These are not ideological questions, they are financial ones, and the moment global capital begins to rebalance, even at the margins, influence starts to migrate with it. Not through speeches, not through treaties, not through dramatic confrontations, but through the simple, silent movement of money-seeking stability. This is how empires fade, not with noise, but with movement. You don't feel it until suddenly you do, and by then the shift is already well underway. And what I see now feels eerily similar to those early moments in history when the world changed direction, while the dominant power insisted everything was still firmly in its control. As heavy as all of this sounds, I don't believe America is powerless. I've lived long enough to see this country recover from mistakes far larger than the ones we face today. But recovery only happens when we confront reality instead of arguing with it. We can still halt this slow drift, but it will require something we've neglected for far too long: fiscal discipline, policy stability, and the restoration of international trust. The Gold Alliance is not the threat itself. It is a reaction, a symptom of a world that no longer feels certain the United States will honor the principles that once made its currency unquestioned. You don't lose leadership because someone takes it from you. You lose it because you stop protecting the foundation it rests on. And here is the truth we cannot avoid: markets do not care about politics. They do not care about slogans. They care about trust, and trust, once lost, becomes almost impossible to regain. That is why this moment matters more than most people realize. Shifts like this do not happen every year or even every generation. They happen when the world decides it must prepare for a different future. So pay attention. What happened today is not normal.